Hey everyone, welcome to another edition of the Buddy Study Group. Today, we're going to be talking through a bit of long-term care storytelling, and we're really going to use Benefit Buddy as one of our guides for going through the concept of long-term care storytelling. Now, I think long-term care, more than any other product, and feel free to disagree with me, requires a degree of good storytelling. Now, it really depends on the client you're in front of for me. If somebody has had a personal experience with long-term care, you may not have to tell the what is long-term care storytelling because if anybody knows what the overarching concept is about, it is that person. But once you get into the dollars and cents of premium and benefit and the actual insurance products, the actual protection, the actual risk management, there are stories to be told there too. Even somebody who's had a personal experience with long-term care either, has the experience of lack of the risk management or how they were helped by the risk management, but that doesn't speak to their story today, right? So we need to tell stories in a way because this is a very complex financial topic, to be able to get people to understand enough about it to be able to take action or make a decision, right? They need to kind of personally understand this for themselves. So I think that's part of why Benefit Buddy was created. We need to be able to kind of tell these stories in real time and kind of use the storytelling to cut to the chase, right? So I'm going to share my screen. We're going to go through Benefit Buddy. I think there's a wide variety of users on the call. So people who use Benefit Buddy a lot. There are people who know Benefit Buddy and want to get better at using it. And there are some who are saying, what the heck is Benefit Buddy? So I'm going to try to cater to all audiences here. And we're going to start by switching over to the individual tab, finding Benefit Buddy, clicking Benefit Buddy, creating a new plan, and I'm just going to give a couple of minutes on what Benefit Buddy is and what it is not, and how I think it can best help you no matter what your process is. Okay? So, Benefit Buddy is an interactive long-term care storytelling tool. That's how I would define it. And it's also a tool that helps with cost benefit analysis of long-term care insurance compared to a variety of scenarios. So it can show you by hitting this minus button just the cost benefit of one type of product. It can compare two products. It can compare one product to the cost of long-term care services. It can compare a product to self-funding in the market. And it can also work backwards from an existing illustration and show the cost benefit of nearly any product you can get an illustration for. Okay, those are kind of the main features. But I think your effectiveness in using Benefit Buddy is as good as your ability to tell the long-term care story, whether that's the overarching long-term care story, what is long-term care, or really being able to compare products and talk about the value of long-term care products. So a lot of the times we take this very sort of logical view of Benefit Buddy, right? I mean, it's hard not to. There's numbers everywhere, right? But weaving in a story and having a plan for how you will go through this and introduce people to the concept of long-term care insurance is just as important to the success of the whole thing. So that is what Benefit Buddy is to me. It is not, in my opinion, a quoting tool like quoting tools that you would commonly use, like uh, a WinFlex or StratDecision. It is more than that, in my opinion. But Mark, do you have any characterizations you want to give about your pride and joy?
Yeah, you described it really well. And I love Benefit Buddy because I'm a numbers person. But you reminded me of a story that I heard maybe like 10 years ago from an agent specialist who mentored me. And he said, when he would discuss long-term care, he would say, how would it feel? You'll see the monthly benefit there, $16,883. If your client every month, month in, month out, year in and year out, got a bill for $16,800. So numbers create an emotion, right? And a lot of our story is about protecting against that financial risk. But to your point about storytelling, you can really use the numbers to tell that story effectively and get your client thinking about realistically what would I do if I was in that situation. So I think it's important not to lose sight, that this is not about the cold hard numbers. This is about how do I get away from that feeling, right?
Right.
If that were to happen to me. So I just thought that just popped into my head when you talked
Yeah.
about.
I think a best practice that we don't go over often, sometimes less is more. I think, at least for starters, showing these two pie charts may be a lot at once. Let's just take it down to the perspective of one product. Let's understand just the basics of how long-term care insurance works, right? So we are showing a very default plan, obviously, to be the most effective at telling the story. You want to adjust this to the client you're in front of, right? So I think a little bit of dress rehearsal goes a long way with effectively telling a story when you're on stage, right? So set this up for your client's situation. If there is a couple you're speaking to, you'll obviously want to show either a couple or shared benefit for both of them, but at the end of the day, you want to set the stage and just give them an idea of how this works. Now, I am showing you a conceptual long-term care plan. What we will do as we go throughout this exercise is dial the numbers in so that it makes sense for you and fits your budget. But for the purpose of you understanding how these plans work, I am going to show you a default. So you're giving them the setting, you're giving them an idea of where we're going to go in this conversation, right? I'm going to dial this in for you so that it feels comfortable for you. But we're going to start with just a concept. We're going to start with the back of the napkin here. So what we're looking at is a traditional long-term care plan. It is pure long-term care insurance. So, how I want to describe the way this product type works, every dollar you put into this plan is going to nothing but long-term care insurance, long-term care coverage. Okay? So, how this works, similar to other products, right? Similar to other insurances out there. In exchange for a premium, in this case, in this example, it is $6,460 per year for this premium. We are going to receive benefit in exchange. Now, what this tool allows us to do is to look a little bit into the future. You are both 50 years old now, but we're going to look at a point in time out in the future of age 85 when you will conceivably need this insurance. We can adjust this age to show a bunch of different scenarios. We can show what would happen if you needed care next year. We can show what would happen if you needed care when you're age 100, right? But we're just throwing a dart at the dartboard here and looking at 85. The client may speak up. Part of telling the story is getting your client comfortable with, saying things about their situation. So I always say, if there's a specific situation that you have in mind, I'm happy to show it because somebody may speak up and say, "Hey, Jay, my mom needed care when she was 78. Can we look at 78?" right? Part of telling the story is inviting your client to actually write the story. They're building their own plan. So always encourage them that there is, the ability for you to have input and we can make this come alive on the screen. But we're looking at a point in time of age 85 when you need this. So if we're paying 64.60 a year for this, by the time you're both 85, we'll have paid $226,000 into this plan. That's a lot of money. And the hope would be that we are getting a lot in return for putting this much money into this plan. So on this side, we're showing at age 85 how much we will end up with on a monthly basis for our long-term care benefit. If you need care, this is how much you would receive per month after satisfying the 90-day elimination period. So you'll have 16,883 available to you per month for your care. And given that we are looking at a 6-year benefit period, that would mean you would have $2.6 million in total long-term care benefit available to you. And by going through all these numbers, we will start to understand what this number means here. The insurance multiplier is key to your storytelling. It is the key in my opinion, because what this number is telling us, Mr. and Mrs. Client, is that for every dollar we put into this insurance plan, we have 11.6 times that in available long-term care benefit. And this is important to the long-term care story in general. I think there are products out there where people may only be used to in the insurance world being reimbursed the amount they've put in, right? Or, there's a very kind of specific sort of coverage ratio. This Introducing this number is key. This tells us how valuable the plan is. How much do we get for our dollar? We're turning $1 into 11.6 when we're talking about our premium versus our total available benefit, right? So as we
Hmm.
continue to go through and keep telling this story, you need to know when the insurance multiplier is larger, the plan has more overall value, overall leverage. When the insurance multiplier is lower, we're looking at a plan that has a little lower value for our dollar, lower overall leverage, right? So I try to take it slow when I'm building this up so that they can understand what that number is. And no matter what changes we make, I want to look at age 78 for the claim age. I want to look at 2 less years of coverage. They'll see exactly what that does to the value of the plan. Focus on that number. If it goes up, we're looking at more value. If it goes down, we're looking at less. That allows them to stay with you. You won't lose them.
Jason, someone in the chat had asked, Leland had asked, what about the increases on the cost over time on the standalone plans? And a client might say that when you're showing this to them. So how
Right.
would you kind of respond to that?
Right. Yeah. I mean, that is one element of traditional long-term care that we hear about a lot, right? There is the potential for rate increases. These premiums are not guaranteed. Though, when these products are priced and given a history of some incorrect assumptions leading to rate increases, we are in a much more educated industry nowadays that is pricing things with those past mistakes in mind and really starting to maybe get to a place where these plans are less of a candidate for rate increases. I can't sit across the table from you or across the Zoom meeting from you and tell you that your premiums will never increase. They are not contractually guaranteed. So that is one aspect of traditional long-term care to keep in mind. We'll look at
Okay.
other types of coverage here that are contractually guaranteed, and what you see is what you get. And if you find a lot of value in that, that's maybe where we're not comparing purely on this number. We're comparing this number and our preferences to make a decision.
Leland, I
Can I
saw
ask
you
a
unmuted.
question?
Did you want to follow up on
I
that?
I unmuted myself. I hope that's okay, you guys.
Yeah,
Can you hear
no
me?
problem. Yep.
So I think the question I have, and I think the clients have, is what is the stability of this stuff? because it seems like the market's moving to asset-based care, right?
Hmm.
And even though asset-based care is priced way higher than a traditional standalone plan, my people are taking it. They're like, give me that higher price because they don't like Mutual of Omaha is rolling out a 38% rate increase right now, from what I understand. So the numbers look cool here on this pie chart, but well, hell, guys, if the guy's 50, the return on long-term care at 85, what are the odds? What
Mhm.
are the odds? I think there's a strong chance we're going to see at least moderate rate increases, if not severe rate increases. And that's where we're dealing with a very
Yeah,
it's
this
a
is
very
perfect.
it's a bit of a bitch to be it's a bit of a bitch in my opinion because I don't like getting calls from clients in their 80s about a rate increase and they're got God forbid dementia, Alzheimer's, all that junk going on, right?
Mhm.
So how
Jake,
do we get our arms around the
See,
question I really have is where is the data showing me the stability on rate increases over time on our favorite standalone plans? I'm calling Mutual of Omaha and I'm asking them, where can I get data on this? And I don't know where it all, maybe it's buried in the buddy system. I don't know, but
so can
where
I,
can I see that? Yeah,
Jason,
go
can I
ahead.
jump in
Sorry.
yeah,
and
go
Yeah.
for it.
okay,
Yeah.
so and I agree with you, Leland. I think you're
Yes.
preaching to the choir here. But what I want to say is this is to tell the stories that you think are important to your client. It's to be
Right.
consultative with the answers. So there's a couple of ways that you can address that. I personally don't think going into that line will help the client move forward. I would say, how do we address those objections? How do we solve that client's need? And there's a couple of ways to do that with Benefit Buddy. One is you can talk about how they can prepay their premium with the 10 pay. So we have an option
Okay.
now that allows you to guarantee the premium because the
Okay.
10 pay with NGL here in most states is fully guaranteed. So that's one solution. Another solution, Jason will show you the hybrid one, is to go right to the hybrid and compare it. Guess what? You don't sacrifice that much value on your insurance multiplier by going to the hybrid. So by showing the traditional and moving to the hybrid because the client has an objection, it actually shows how good of a value the hybrid has. And when you do a 10 pay, you'll see even more so that the hybrid might be more leverage than a traditional. So you said, well, you think that it'll be more affordable on the traditional side. That's not necessarily the case, depending on the client situation. So I don't think it's about telling the story about why this time's different. I think it's listening to your client, responding with the features that address their concerns. And that's the story that I think is most important in Benefit Buddy. Because this product, these hybrid products now are different. It's more competitive. This seems to be a better fit for you, Mr. and Mrs. Klein.
You
That's
see,
how I would approach it.
yeah, it's perfect that you spoke up with this because like this is exactly what I'm trying to get this all to do. I'm telling the story, I'm introducing it so that I can really make the client comfortable with saying, stop right there, what about this? Right?
Right.
When they say stop right there, what about this? They are giving me signals as to what is important to them and what's important that we solve or what they have heard that they want to discuss. Like the story is actually eliciting the questions, which is getting the client to guide us through the experience. So if you were a client asking that exact same question, I would respond kind of in the same vein that Mark did. Like, listen, I don't have a crystal ball and can't tell you exactly where these plans are heading if the premiums are not guaranteed. But there are ways to either make sure the premium is guaranteed or there are products we can look at with guaranteed premiums so that we don't have to deal with that concern. We don't have to make you uncomfortable with the uncertainty,
Yeah.
right?
I'll give you another tip here too with the side by side is let's assume that there is a rate increase. Let's say that the future costs are going to increase 10% or 20%. I mean, you can say whatever number you think is realistic, but if it were to happen today, this is how much the carrier would need an extra premium. You can kind of either, if the custom LTC module or just in your mind here, say, well, $6,500 joint annual premium, if there's a 10% rate increase, it would be $7,100. Your insurance multiplier will go down 10%. So it'll be about 10 times instead of 11 times. Now you can kind of compare them more apples to apples. And the fact that you got this guarantee on the hybrid side, maybe that's why you go with the hybrid, because if you do apples to apples, you're going to get more leverage because you're going to assume that rate increase. But you have to kind of tell that story still, and I think put some numbers behind it so that you can really get a flavor for what does that mean. Because it's still maybe worth it to pay a 10% rate increase because you're getting a really good deal on the traditional side,
It,
even with
it,
it.
it's a, I guess the question I can't help but wonder is where is the mother load of data on the rate increases over the main traditional long-term care providers? I don't know. I don't know. But if I'm looking at a long time horizon, like I got a 50-year-old here who's going to need long-term care at 85, I can't help but wonder what
Mhm.
kind of history do we have with these carriers on rate increases so I can kind of tell
Sure.
the client as much as I can disclosure wise as to what they can expect going forward, even though I like to think the carriers have gotten smarter and the rate increases have gotten, less dramatic. I want to
Sure.
soften the blow and offer as much disclosure to the client as possible. And I don't want that phone call with someone's pissed
Right.
off when they're in their 70s complaining on a fixed income, Social Security. Oh, hell, I
Then
got a
I
rate
would
increase
say
of
you should
20%.
try to position the hybrid the way that because you think that's best for the client, correct? So I think that just is your answer to that question.
Yeah,
Sometimes your clients are going to tell you, I'm okay with that risk, and I still want to buy traditional. And in that case, I
Right.
would offer them traditional, right? Because it's their
Yeah.
decision ultimately. But you're going to tell them, I would advise you not to do this because of my past experience. That's been a problem in the industry, and I think it's going to continue. So, they're approaching this full disclosure, right?
I think
Whatever the decision is.
at the end of the day, when you do apply for traditional long-term care on the long-term care personal worksheet, I do believe they actually share recent rate increase history for specific policy generations. I could be wrong if it's on the actual insurance worksheet, but I think I remember somewhere in the Mutual of Omaha application, they
Mhm.
actually show a number of recent policy generations and their rate increase history. But I think there is, I'd say, a danger of giving your client way too much information and paralyzing them into not making a decision at all. You should absolutely be upfront and have the discussion that premiums are not guaranteed. There is a history of rate increases. Seems to be potentially trending in a better direction, but I cannot guarantee you anything. Just like this product cannot guarantee you anything in the way of no rate increases without a guaranteed 10 pay, right? But I think if you give them the whole book and say you should really look through all of this data before making your decision, I think it's actually to the detriment of the client moving forward. And it's hard to say, right? Because we all feel um this obligation to give as much information as we possibly can, but you have to do your best at managing what is way too much information, what is not enough, and getting yourself down the middle. David, you had your hand raised?
Yeah, I just wanted to add to that. I've been doing it for 35 years. And so when they first came out, they offered these unlimited plans for garbage prices. I mean, just lower than hell. And you knew it wasn't going to work. Well, they've all eliminated the unlimited now. And that was where a lot of their problem lay. So I think you could make the case that, yes, they have learned from experience. And true, I think counteracting that, you could say there are fewer smokers. I've always said if you want to get rid of your long-term care problem, I think 5 packs a day will just do the job, but it's not necessarily going to work in your favor for long. But the other thing that works nicely is if you have a sufficient plan, you can have it where they can drop back because they always give them an offer to say, okay, we can keep your premium the same and drop back your coverage because you build it up so much. And that's an option too. So I always tell them that. But I think that's the case, particularly when you're dealing with 40 and 50-year-olds. I find that traditional is more attractive to them because their income, they got good income, but they don't have the necessarily the 15,000 a year, whereas the 6,000 is a lot easier to come up with. So you may end up just losing the sale completely because they'll say, oh, well, in order to get what I want, I have to pay more than I can afford, so I won't get anything. So I think you have to balance all those factors out and know your client and know where you're at. But a lot of your middle class people, I think, are still going to be the traditional. If they got plenty of money and they're upper middle class, the hybrids work fine, even if you're 50, because they can afford it.
Yeah,
But not everyone can.
yeah, let me address something there too. I think that's a really important point, and Jason was kind of alluding to this. This is a storytelling tool. It's not to quote a particular product itself. It's to say, hey, I like this concept. This is what I'm comfortable spending. And let's say it's not 15,000. Let's say they want the recurring premium. That's where you might go to a One America product. That's where you might look at a pay to 100 product. But by the time you get to that quote, you're going to have a much better idea, to your point, of what they're looking for by going through the Benefit Buddy process first, kind of gathering their feedback on that. But you know what the market looks like and that they do have options to accommodate that. You can also just lower the amount of benefits, on these plans and a lot of different ways that you can get them into something instead of nothing.
For sure. Yeah.
Something beats nothing.
Yeah, we sometimes run the risk because we have this duty to provide information and be the expert. We do have a risk of informationing people out of doing something that have not yet done something. So I know it can feel like a dumbing down, or it can feel like I'm afraid to leave something out, but I think giving too much can be maybe not as much of a risk as an omission, right? But it is risky to the client's attention span and just ability to act. I know for me, if I have to, um, I'm just that kind of maybe it's my attention span, maybe it's something else, but if I have to spend more than 30 minutes on a very minute specific topic, you're gonna lose me, to be quite honest. Which is amazing to me that many people sit through a 45-minute to 60-minute study group session every week. I love you all for that. For me, you can lose me, right? So you gotta keep me in it, and you gotta go by like my questions. You gotta be my guide based on what I'm saying, and you gotta give me kind of the room to give my concerns and go that way, or you're gonna lose me too. So it's an element of storytelling like any else. And I see both sides.
Yeah, and I can't emphasize the fact that the pie charts, I've really stuck firm that we have to have these pie charts because there's just something visual about being able to show your screen and having people want to follow the bouncing ball and ask those questions and be engaged. If you're just talking on the telephone, you're going to lose them much quicker and it's going to take a lot longer to get to your point than by just showing them the numbers,
Here's a
letting them ask
follow the
questions.
bouncing ball. Hey, my mom was on claim at age 60. What's this look like when we go on claim at age 60? Remember 11.6, 11.3? Well, when we hit the update, drum roll, please. Well, that's quite a change. What happened? You know? Let's have a discussion about what just happened there. We went from 11.3, 11.6 to 19.4, 7.4. What could that possibly be? That's your next chapter of the story, because the client has made some sort of mention, they've made some sort of personal relation to what you're talking about, and now everything is out of whack, right? And we need to explain why. In this case, we are doing a pay to 65 premium and a recurring premium, and we know that premiums stop when you are on claim. So we've only put in 64,000 here, but we've put in 169,000 here. And we're at the same long-term care values, right? So if we claim earlier, the value could actually be exorbitantly in favor of traditional long-term care. So there are trade-offs in many different ways that you can slice a scenario. So that's why I say, well, like with the storytelling, I want you to interrupt this story and I want you to ask questions and I want you to relate this to your personal situation, because we're gonna learn a lot more about the coverage together that way, right? Um, so,
And Jason, while you're on that one, well,
oh, you want me to stay there?
yeah, just switch it over to the self-funding.
Yeah,
I think just kind of talking about some more of these is
We'll do
helpful,
we'll do
whichever.
hybrid versus
Okay.
self-funding. We'll keep it age 85 just for now.
Okay. I think a lot of these are not about which product is better. It's about, do I want to do this or not? And
Right.
this is the biggest objection. I'll just self-fund. I put it in quotes because a lot of people don't put aside the money to do that. They just want to put it out of their mind to pay for an insurance product. And this helps them get over that fear, a lot of the time. If they're getting good value from the product and you're able to show them what self-funding would look like in a conservative way, I think you're going to see that looks better than I thought it would be in terms of
Right.
how my money is being spent. Now, again, this is agnostic. You can do traditional the same way. Obviously, if you did that, you're going to see that being probably more attractive relative to self-funding because, again, you're spreading that cost out over time and you can't earn as much money on your investments. But it's kind of like knowing what the client's wanting by what they're saying, showing them the numbers so that you can tell that story quickly and easily, and getting them past that blocker, like Jason just said, The fact if you have to have 30 minutes to tell that same story, it's likely they're not going to move forward with anything. If you're able to tell to it in 1 minute, okay, thank you. Now we can move on to the next question that you have.
Let's compare big number, and I'm going to ask about the discrepancy, right? And part of it is when you're storytelling, again, like do what you can to make the client the engineer of the story in some way, shape, or form. If they're just being told a story instead of being included in the story, like I didn't come here to just like sit down for story time and not have it involve me at all. Plain and simple, right? Like if you don't involve them in the story, how are they going to feel personally connected to this decision, right? So even on the self-funding side, a lot of people use Benefit Buddy because, whoa, the client is trying to take the story to the self-funding side immediately. So I'm pulling up Benefit Buddy here, and one of the ways to involve them in the story is how much do you think you are going to get in returns in this period of time in your market account? You can be conservative, you can be aggressive. I'm happy to make any sort of comparison. Some people are like, my advisor's good, I'm going to get 7%. Some advisors say, I'm good, I'm going to get 7%. Some say 8, some say 9. I'm still willing to compare this and show the numbers. We're getting 7% year over year. Hey, I'm getting in this in some sort of tax-free vehicle. Fine. I'm this is your story. I'm just here to show how it plays out when I put it in the number machine, right? At the end of the day, I am here to compare these two approaches, right? What does and this is not going to tell the whole story. You still have to be that expert who's helping them read between the lines. It's not just the story of 11.3 and 6.9, though that's very compelling, right? There is still in the market, if we are experiencing a down year and we need to draw on this money for long-term care, are we not selling our assets low? When we have an intro to finance class, is it not buy low, sell high? Are we having to do things that are contrary to our best investment advice because we have a specific long-term care need? At the end of the day, if we are in a taxable vehicle, we're further eroding our value. But let's look, let's take this
Or,
down for
or Jason,
50-year-olds.
just to jump in too, like,
Hmm.
you hear this from the carriers, right? Is this a better way to self-fund?
Right.
Right? And because it's not an all or nothing long-term care insurance, it's how much do you want to self-fund and how much insurance do you want to
Yeah, yeah,
buy?
we'll get to that too. Yeah,
Cost of care.
right. Yeah, exactly. And look, what if we have a claim 5 years out? We don't have that time for growth over here, but we have immediate leverage over here. I'm not here to say that you shouldn't self-fund. I'm not here to say that you don't have the ability to self-fund, I'm here to show you that insurance is a pretty darn good deal in a lot of scenarios against self-funding, right? But even knowing all of this, right? I am I am going to tell you that there is some self-funding that's going to be involved in this, right? I Most of the people I see are doing some insurance, some self-funding. Now, we have a storytelling module for that as well, right? We can dial in the cost of care in your area. If we've dialed in all the numbers over here and everything looks good with regard to your budget, we can take it over to cost of care and say, here is your long-term care benefit. Here is your total cost of care in your area. And again, I'm not going deep into things, so we can adjust a lot of this. We can adjust it for nursing home, assisted living. We can put in a custom cost of care, but this is reading Texas from the Genworth cost of care study. We can lower the assumptions on years of care. We can set a higher care inflation. We can dial in all that we want. But from a total standpoint, at age 80, we're projected to have a 17,363 cost of care and a 14,564 monthly benefit. We've got a gap of about 2,800. Are we comfortable with that gap? Are we okay self-funding that 2,800 gap? Would we like to self-fund more? Would we like a bigger gap and just feel more comfortable filling in that gap? Or do we feel like we're getting good enough value from the insurance that we want to kind of leave things as is, right? We can dial back the insurance coverage if you feel comfortable with self-funding more. I just care about the fact that you have an efficient plan that works for you, and some of this leveraged insurance in your portfolio is going to be a big benefit to you in a number of ways. But it doesn't mean anything if it's not comfortable for you. So let's get
Yeah,
to
they
where
might
you're
say,
comfortable.
Jason, for example, they're in Texas, but hey, I'm going to retire. My family's from Connecticut. Change it to Connecticut, right?
Right.
And just on the fly, you're going to see kind of how that picture changes. That might actually change their decision, right, about how much they want to buy. Now there's a bigger gap, 21,000, right? $7,000 gap. Well, you have the ability to buy more if you're comfortable, and that's something you like the value you're getting to cover that gap. But if you don't have this conversation, you don't show these tools, I think it's harder to get to that conclusion quickly and easily and help people get to the outcome they're looking for.
So
You
it
know,
go ahead.
if I could, a couple of things. I really love this stuff because it's very, very powerful in terms of showing the numbers. And I come from an investment background and, I'm a math degree and all that. So I love that. But I think when you were talking storytelling, I think you need to put a couple of extra things in here. And I'll give you two that I've used that have been successful. You have to have, first of all, why should I do it instead of self-funding?
Hmm.
Well, I do the storytelling where I say I had a client who had his mother, and then he knew another friend who was mother. And on my client that had the long-term care insurance, and then they had 1 million plus in assets. They went to the same place to try and get in, but there was a backlog and had a waiting list. The one who had the $1 million was in front of the other by 2 months, but the one who had the insurance got notified first that she could come in. And I went and talked to the administrator and I said, both of them could afford to pay for this. What was the difference? And he said, I'll tell you, but I will only tell you on the condition you can't use our name or anything about us on what this is about. But if you think about it from our business perspective, with the insurance, we're going to just send out a bill and get paid. When we have the kids complaining about their inheritance going down the tubes, we have to deal with them plus take care of the patient. Which would you rather do? One without the complaints on the money or the one with?
Yeah.
So you have to look at it from the perspective of the business as well. They want to not have to hassle to get their money. And the second thing I've used, and this goes back to old style, I suppose, but over the years I've asked thousands of times, why are you doing this? And I boiled it down to 6 key reasons. I don't want to be a burden on my spouse or kids. I want access to quality care. I'd like to get an inheritance to my kids, and I don't want to end up on welfare and peace of mind and that kind of thing. So what I do is I give them a list of that, and I have each one, the husband and wife, fill it out separately. And that gives me a basis for why are we doing this in the first place? Because if you don't have a problem, you don't need a solution.
For
Now
sure.
we can come up with the best solution using Benefit Buddy, but I first need to get the commitment to, do we even have a problem?
Yep.
So those are a couple of tips that I would pass on.
Yeah. And sometimes we take it for granted, but we totally agree that you really have to help the client understand the need even before you go into the numbers.
Right.
Sometimes though
But it's
people are
like
just hung
Jason
up.
said,
Yeah,
it's like Jason said, it has to be there. They have to be involved in that. If I tell them the problem, that doesn't do any good. That's
correct.
not their problem. They don't own it. They
Right.
have to fill it out. And I've found it very effective. I have them list the top two reasons out of the six, and they kind of take ownership once they've looked at that.
Yeah, I think most of the top specialists that are on these groups and in our community will always have their personal story that they're telling, right? We'll always ask the client for their story first. And that's the point of Benefit Buddy is to incorporate it into your sales process. This is not to be the end-to-end sales process. This is to fill that role of helping the client kind of build, the insurance part of that story out.
Yeah.
So
And it
I think
does
it's
really
important
well at
not to
that.
miss that. Yeah.
Yeah, Benefit Buddy, I think, is designed so well to fit into an existing process that has stories and has that sort of conversational experience and knowledge with long-term care planning. Benefit Buddy's going to sit here and give us numbers, right? It's going to give us pictures. And that's why I said at the very beginning, it is really down to your ability to consult and storytell and really involve the client in this. Benefit Buddy's kind of the whiteboard that you're using as you're having the conversation and as you're telling the stories at the end of the day. So I totally agree. If you don't have that sort of process, it's you're going to find it a little bit more difficult to work with Benefit Buddy, though you will still be able to get results. I think you have to do some practice with this. I think anything that's worth being good at, anything that you can get value out of is going to take some practice. And I highly recommend setting up Benefit Buddy kind of ahead of time with your clients in mind and just running through all right, how are we going to actually go through the conversation if I'm going to use this? And I think that's where people end up getting the results.
Yeah, I think some people also just a certain personality that just gets cold to you if you don't show them the numbers. That's why they're asking you, I want to quote. It's not that they don't believe in the need or, they just don't want to kind of open up to you if it feels like you're trying to sell them something.
Yeah.
And if you empower them by showing them some numbers, sometimes that warms them up to wanting to have the conversation. So you don't have to go in the same order every single time. It really depends on the clients.
Yeah, you spoke to it, David, on the end of not enough conversation, not enough story. And on the other end, there are people who have the conversation, have the story, and they don't even realize the client is thinking, like, come on, buddy, show me the numbers. Like, what am I here for? What is this going to cost me? You're storying me to death, but I don't know how much this is going to cost. How could I possibly continue to sit here when it's been a half an hour and I have no idea how much I'm going to spend on this thing or how much you want me to spend on this, right? It's a frustration that actually builds up. And I think you can actually do this audit for yourself. If you're getting first meetings and you're not getting many second meetings, think about it. Like, am I cutting to the chase quickly enough? Am I frustrating the people that I'm talking to? So it's a good point. There's two sides of that fence, so it's about marrying them both.
Yeah, Jason, can you do
When
the
you're using hybrids and traditional, what companies are you utilizing to come up with the numbers?
So this is based on NGL, National Guardian Life's traditional, and Nationwide Care Matters as the hybrid. But we intentionally don't name the carriers because it's really
Right.
conceptual and we don't know what carrier is right until you have this conversation and you have the underwriting conversation as well. But I would say this to your point, Jason, and do go back to a single person real quick without spouse or partner and change the payment to monthly
Okay.
pay. And this is how I almost always start a conversation because when it comes to price, I think how you kind of start this conversation is important. We're showing a $15,000 a year premium. This shows a $274 a month premium. Makes a huge difference where you start with this in terms of getting them comfortable. Okay, that doesn't sound too bad, or that's a lot less expensive than I've heard or I thought it was. Because people actually equate 100,000 or 200,000 single premium. If that what they were quoted, that's all they see, right? Is a six-figure number, and now they're saying a three-figure number, right? To start off with. Now the total premium is still 100,000. So when you work your way up to a more comprehensive plan, you can then kind of gear them on that total number and get them comfortable, but they're still empowered to back into the $274 a month premium still. And I think that also is a big factor, Jason, in getting the second conversation. It's how you have positioned this in the first place. A lot of times that objection is under the surface that it's just too much too soon. They need to kind of be eased into the plan that you're recommending to them.
This conversation, this wonderful long-term care conversation that we all have, it needs to be accessible. If it is not accessible, what is the way forward in a client's mind, right? And there are many different ways to make the conversation accessible, but I think just do a little noodling on that. Like, does this feel like an accessible conversation for the client in accommodating their learning process, in incorporating their ideas, in showing, starting the conversation in a place that's not cost prohibitive, in starting with costs up front so I'm not thinking about that the whole time I'm trying to give information. Storytelling is about accessible conversations. Sometimes you need tools to help it make a little more accessible. That's really kind of the basis of the conversation today. I think on all of these modules, especially self-funding, at least once a year, I have a conversation where it is all self-funding for the study group. And we talk about how to use it in Benefit Buddy, but just the number of different layers to that conversation you can pull out. But you can go down all these rabbit holes. If the client doesn't take you there in some way, shape, or form, um, you could lose them, right? At the end of the day. So I think there are so many more stories we can tell, so many more ways we could kind of present Benefit Buddy to you here, but I wanted to make sure, we were talking about like the essence of how to tell a story with long-term care in that it's got to be client guided and you've got to really reassure the client that this is their journey that you're helping them build. They have to be front and center to this. They have to take responsibility, like David said. You got to understand the why so you can have that accountability for, satisfying it. And then you have to make it easy for them to understand and stay with you when you show a number of different scenarios, right? You've got to have a number of different ways to put things, show things, and you got to be able to do it kind of quickly, right? We don't have all day. We don't. I know we think we do, but we don't have all day. So we got to kind of cut to the chase, and that's why we're sitting here with tools like this as an aid to us. And
Do you
Mark,
tend to
you're
start with the
sorry.
self-funding and then hybrid or traditional?
I start with one product. It doesn't matter
Ah,
which. They may come in with a preconception, or a predisposition to one product or another.
hmm.
So
You could start with cost of care there too, as you saw,
yeah,
if you
you
wanted
could
to just
start with
start
cost of
with the
care.
need.
But I generally like to keep it like one pie chart. Let's understand how one pie chart works. Let's understand monthly premium, total paid premiums. Let's understand claim age, right? Let's understand total benefits, and let's understand the multiplier. And then wherever we go, oh, now we're just comparing two multipliers, right? We can change numbers over here, and we'll see this number get bigger, this number gets smaller, depending on what we change. And once they can handle that, they can handle two at once. then they can handle a different scenario that's not even insurance and still know that it is kind of multiplier dependent, right?
Yeah, and you don't have to start with the client. I think that's another key thing is if you're deciding what you want to do and how you want to present the story, I would go into Benefit Buddy before you meet with the client. And to Jason, your point about saving time, just kind of map out kind of the progression of how you want to walk them through the planning process. You don't have to just go in on the fly. In fact, I would tell you not to do that, right? You want to have an idea of what the end is in mind, right? When you go into the conversation. It also saves you a ton of time and the client a ton of time when you get there because you'll know kind of what progression you're looking to make and how to help guide them in the conversation. So even you have flexibility to go in a lot of different directions, you'll have kind of an agenda, if you will, as how you're going to get them through this in a quick amount of time. And be realistic. If you have 15 minutes with the client, build a progression that, only takes 5 or 10 minutes because they're going to be asked some questions there too. That's going to be the most effective way, I think, to have your meeting is to prepare with it before you have the meeting.
Yep. And I think, one of the great things to hear from a client is like exactly, Leland, how you kind of spoke up. I love to hear challenges or hey, wait, hold up, what about this? Right? That's them saying, all right, like I am now ready to be a part of the story and help put this part of the story together. Can we go here? Can we look at this? What about this? That is interest, that's engagement. And I think that is a sign that you're actually working in the right direction because the client's got to build it. If they don't build it, how are they going to feel any attachment to it to make that affirmative decision and then hold it because they know what it does, right? And they like I built this, I took responsibility for it, I accomplished this plan. I'm not going to let it go, I'm going to keep this.
Yeah, and you can also save it. I know we didn't cover that today and share it with them. So you can say, this is what we discussed on our call. And when they come back to you 2 months from now, which is going to happen a lot of the time, let's start where we left off, right? That's a way to help them remember what the conversation was, and you can re-engage with them a lot quicker too.
You might have to have less reviews because it's just memorable, right? Like, wow, I went through an exercise as opposed to like being told something or handed a packet and come on, this is good for you. Like, what is it going to do for you? What do you want it to do for you? Like, why are we here? Right? Those are the things that like really get people to take things personally. I think when they take them personally, they they just have a lot more juice into the decision and that creates memories, right? So I think that's really the key. It wasn't as much about Benefit Buddy, though it's the tool that helps. It's not as much about one specific product or another, one specific approach or another. It's really about that concept. How do you get people to really, take something memorable from your discussions? That's all I had. Anybody have any comments, questions, thoughts?
I would just comment that I'm finding that because I think you guys may recall, all I did was asset-based long-term care. That was
Hmm.
all I was trained to be a professional in over at the other IMO I worked for, and that's all I did. And since I've left there and going out on my own, I'm realizing that I'm including the traditional because I understand what happened. The historical, they didn't know how to price it. Products, what, less than 50 years old. No one knew how to price it. Now they've learned, the industry's learned through regulation and repricing. So we're not seeing those premium increases like we used to. And we're not seeing them as drastic. And the increase that we're expecting from Moo, I think, is, maybe it might be up to 35%, but it's probably only going to be in 8 or 9 states, right? Because it's based on claims experience. It's not across the board increase.
Mhm.
So anyways, I think the traditional is definitely a starting point. And I typically have been just showing like a small spreadsheet with the traditional and the hybrid and maybe life plus rider if there's more of a death benefit need because you tend to get more death benefit from those. But if it's primarily long-term care need, I'm really showing the traditional and the hybrid and letting the client guide me based on their comfort level, what's best. And I just had a couple I was working with saying that the traditional was in their budget and they weren't very forthcoming on, I knew what their assets were in terms of the breakdown and their net worth, but they didn't have their monthly retired budget figured out yet, but they think they have a ballpark. So they just said, this is affordable. So we were moving forward. And then they came back and said, well, now we're worried about not having inflation and just having a flat $9,000 a month. And now we want to consider the hybrid. So now I'm requoting them, which is great,
Mhm.
but they guided me. I gave them the option in terms of, what we're talking about today. So
Yeah.
I
I think the
like
key to what you're
including them.
saying is being holistic. It's like when you only offer one product to everybody. Clients are just going to naturally have their guard up and say, what else is out there? Did you even look at that for me? So sometimes your traditional, yes, it's going to be the right fit for the client. Sometimes it just helps you sell your preferred type of product because you've shown all the options and they understand why you've made that choice for them.
Yeah.
So I think the transparency and trust of doing
There's
that
no
is
sticker
the most
shock.
important
When you
thing.
start out with a lower amount, doesn't mean where you're going to end up. It's
Right.
just doesn't
Exactly.
create sticker shock.
Yeah,
Exactly.
and to your point, Elena, you can get so busy campaigning for one product. So I need to campaign. This is the one thing I got, so I have to make it strong, right? And when you are able to flip that on its head and start asking questions and saying, where do you want to go? We can go wherever. And one
Yep.
of these days I'll talk Diane back into another session like this, but Diane is so amazing at what she does because she's a Sherpa. I am here to guide you. I can tell you what to do at times based on my experience, but this isn't really going to have the effect that anybody wants it to have if you aren't building it. You're not going to be alone, but you got to build it, right? And I can offer anything you want to look at, right? So, yeah, I think super important points. Um, Hope you all enjoyed today. Thank you for your questions, your comments. Hopefully, this helps you in future conversations. But we're going to start with some product presentations, either from top specialists with those products or carrier reps coming up. Going to be a pretty big block of those sessions. So, hope you have your notepads out and everybody take care. And we will see you this time next week. Have a good one.
Guys,